On today's episode, we are going to take a look at 3 real estate companies that are down big from their all-time highs right now. Each of them are expected to see crazy revenue growth. Right now, we're in a crazy real estate market. So like always, we're going to learn what they do. We're going to learn where they make money, their balance sheet, fundamentals, future growth, and much more. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and make sure to stay tuned where I live stream here on YouTube, taking a look at stocks you want me to look at. So let's get started. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. Alright, so the first stock we're going to take a look at is Zillow. This is a company that buys your home, sells your home, and rents out your home. So Zillow is pretty much everywhere during the real estate process. They own different brands. For example, Zillow, where you can use their internet website to kind of search for homes, right? And they have advertisement, brandings, and other stuff there to collect revenues. Then they have their premier agents where you can sell your homes through them. They collect some form of fee. Zillow also buys your home with Zillow Offers. Another way, they take fees from that transaction. And then once they resell your home, they take fees from there as well. Zillow Rentals, Zillow Home Loans, right? If you want to take out a loan, you can go through there, and the closing services. So you can see Zillow is pretty much all through the real estate purchasing process, and they collect fees in every single process from them as well. So Zillow stock right now is traded under the NASDAQ as ticker ZG. It's currently sitting at $138.94 with a market cap of $33 billion. From its 52-week high, the stock has pulled back a nice amount, over 31% at the moment. So you can see, right, it's crazy the amount of pullback, but I'm happy we've seen these pullbacks. It helps eliminate a nice portion of the risk. So if we want to take a closer look at how Zillow makes money, they have 3 revenue segments. First is the mortgage segment. Here's where they deal with, obviously, the mortgages of purchasing a home through their Zillow mortgages. They also have the IMT segment. This is the biggest portion of their revenue. This is their internet, media, and technology segment. This is you using their platform. They collect some fees from just posting and listing houses here and there, advertisement as well. Then they have their home segment. Their home segment is mainly when they buy a home and kind of resell that home. So we can see from their overall income, they're only profitable in their IMT service and in their mortgage segments. Right now, their home segment is still at a loss. They are profitable in adjusted EBITDA, but if we take a look, and we're going to take a look at GAAP earnings, they're still not profitable. So some recent news about Zillow. They recently acquired this company called Showtime, and this is an industry leader in home touring technology. One of the great things about Showtime is if you are a home buyer or you're a home seller, you can have a schedule of when you want people to come look at your house, and people sign up on that schedule, making that whole transaction and people coming over to view your house a lot easier, right? It's not just a random time. Now, if we take a look at fundamentals, in the past 3 years, Zillow has grown crazy levels, right? In 2020, it grew its revenue 21%. In 2019, it grew 105%. In 2018, it grew 23.8%. If we take a look at future growth, this company is expected to grow its revenue 30.1% on average for the next 3 to 5 years. So historically, it's been a huge grower, and in the future, is still expected to continue that strong growth. If we take a look, the company in the future is expected to be profitable by 2022. So that's great news. GAAP earnings, it is expected to see that positive positive that positive revenue growth, and it is also positive in cash flow from operations. So that's something that's super excited. And in their most recent earnings, we can see their balance sheet does look pretty strong. They have about $3.9 billion in cash and about $2.3 billion in debt, right? This is a company that is positive in cash flow from operations, and it is positive in EBITDA values. So it's okay to have that kind of debt with that kind of cash. If we take a look at analysts, there's about 17 following the company, 13 give it a buy, 2 give it a hold, and 2 give it a sold. So this a sell. So this is a moderate buy. The average price right now is $199, and that's about a 43% upside from where the stock is at right now. The second stock we're going to take a look at is one very similar, and if you compare Zillow, you most likely talk about this one. So this is Redfin. Pretty much the same services that Zillow has. If we take a look, this is traded under the NASDAQ as ticker RDFN. It's currently sitting at $65.64 with the market cap of $6.7 billion. This is a much smaller company than Zillow. From its all-time 52-week high, the stock is down about 32%. If we take a look at the revenue segment, the company right now makes most of its revenue from real estate services, very similar to Zillow. The other portion is properties like Zillow Homes, and then it's others. Unfortunately, though, the company is not profitable, very similar to Zillow, right? The only one that really makes money for them is the real estate service. Their property is still at a negative. So some recent news about Redfin. They now offer cash home offers to Boston. Redfin now also launches in Tuscan, and it reopens in Las Vegas. They also just did an acquisition of RentPath. RentPath operates leading rental sites including apartmentguide.com, rent.com, rentals.com. Combined with RentPath, Redfin can now be a destination for all North American consumers looking for a home, not for those just looking to sell, right? Also those looking to rent or maybe even rent out their property. So that's a pretty smart move from Redfin, in my opinion, and it's going to bring a new form of revenue to them. Some other stuff, they did offer a $500 million convertible senior notes. This is not due till 2027. I'm pretty sure this is going to help them do that acquisition of RentPath. If we take a look at recent news for Redfin, and some of these news can actually go with Zillow as well. March was actually the hottest month in housing history, says Redfin. The national median house price sets a record of $353,000 in March, and that's up 17% from 2020 and a record high of growth. So right now, houses are insane. What else do we have? Housing supply shortage intensify, driving prices up 18%, right? Obviously, it's going to suck that there's less houses for companies like this, but they also take a fee off the transaction. So if the houses are higher, they're going to collect more fees. Next, we have luxury home sales rise 42% in first quarter, far outpacing the 7% growth in affordable home sales. People are out there buying fancy homes. Now let's take a quick look at fundamentals. So Redfin in 2020 grew 13.6% revenue, in 2019 60%, in 2018 31.5%. So historically, it's been a huge growth. In the future, this company is expected to grow 24.1% for the next 3 to 5 years. So historically and future, expecting strong growth rate. Redfin is also positive in cash flow from operations and is expected to be profitable in earnings by end of 2023. If we take a look at their balance sheet, Redfin also has a strong one, right? They have about $1.1 billion in cash and about $573 million in debt. Now, again, more cash than debt. They are positive in cash flow from operations, and they are also close to achieving profitability. So great things for Redfin. Now, if we take a look at analysts, there's about 11 looking at Redfin. They don't seem to be as bullish as they were for Zillow. 4 give it a buy, 7 give it a hold, and 0 give it a sell. Right now, the average price is $86.13, and that's a 31% up from where the stock is at right now. All right, so the third company we are going to take a look at is Matterport. This is going to be a SPAC, and we're going to see that in a bit. But this is more of a 3D camera. So with their 3D cameras and with their application, you're able to take immersive 3D shots of the product or whatever you're trying to show. Right now, it's very, very strong in the 3D market, in the real estate market, especially with the overall COVID situation, right? People would rather stay home and just look at everything from their computer. So this is currently traded under the NASDAQ as ticker GHVI. And right now, from its all-time high, the stock has pulled back about 44.7%, a crazy pullback. And I don't know if I mentioned it's sitting at $13.51. So it's close to that nominal value for SPACs. So some recent news for Matterport that's super interesting. On April 420, so about 6 days ago, they finally launched their application to Android in 175 countries. This is going to bring a whole new level of people using their application and using their services. Here's another picture of how Matterport is used. You can see here, if you're trying to rent out this property, if you're trying to sell this property, the buyer can see everything about it. And this is one thing I really like about Matterport is how they're showing their innovative process. So right now, right, it's pretty much just this 3D immersive picture. But within that 3D immersive, one can collect a lot of data like dimensions, measurements, and stuff like that. And that's where they're trying to move forward. Next, we can see that they're not only being used by real estate, but they're also being used by architectures, engineering, construction companies, travel, and hospitality, right? If you want to go to a hotel or a quick stay, you're able to see where you're staying at a 3D immersive view. Repair and insurance, if something happens, you can use their cameras as well to kind of see how the damage is done. And insurance companies can, instead of going, they can see everything from their main base. Industrial and facilities are also using this at the moment. Another thing I like, less than 10% of total revenue comes from the top 10 customers. So they have a lot of customers making plenty of revenue. So it's not a one team, not one customer is really driving the show for Matterport at the moment. Now let's take a quick look at their transaction summary. The overall value this company is going to be given is $2.9 billion at $10. Right now it's at $13, right? 13 and some change. So it's about a 35% increase. This company does have a nice portion of cash, right? They have about $700 million. And that's good because unfortunately right now, Matterport is not profitable. Even if we take a look at EBITDA, they're not expected to be profitable in the EBITDA earnings till 2024. If you guys know anything about me, I kind of stopped looking at things after 2-3 years. So 2023 is probably the max I will look, but they are expecting strong revenue growth. For 2020, they expected about $85 million in revenue. So we can see $85 million in revenue to a $2.8 billion valuation. Some people might be like, hey, Jose, this is crazily expensive. And that might be true, right? It's one of the risks. All right, so now let's take a look at my overall thoughts. And before I do my old tier, all of these, the major risk I want to say for them is there's a lot of competitions kind of entering this real estate market. Mainly on Redfin and Zillow side, we keep seeing a lot of new companies doing this. The other thing is right now, even though they are expected to be profitable, they're still not profitable at the moment. So I do think they will be very volatile for the next few quarters. Matterport is a whole different story, right? This is a SPAC, one that's not expected to be profitable anytime soon. So the volatility in that one is a lot higher. And because it's not expected to be profitable anytime soon, the overall risk of the right, there's a lot more risk in that side of Matterport. Now let me kind of talk about how I would rank them. All right, so now let me give my overall thoughts on each stock, right? So Redfin and Zillow, I think both of them would be very similar, marked against each other. They will probably both be a low tier 2 in my portfolio if I was ever to buy, right? Both of them are expected to see crazy revenue, and both of them are expected to be GAAP profitable within the next 2 years. And they also have a very strong balance sheet and continue to expand into new markets. So Redfin and Zillow, they're more like that growth stock, but one that has already proven himself. The third one would probably have to be Matterport. So Matterport, to me, right now, I would kind of, even though I might get some hate for this, I would call it more of a speculative play. The reason for that is they're not expected to be profitable anytime soon. Even when we take a look at EBITDAs, right? And EBITDAs, they're not expected to be profitable until 2024. So this is more of a speculative play, right? The amount of revenue that they have right now, based on their price to sell, is also a bit intense. But regardless, this is a pretty cool market. We're seeing them really expanding with huge amount of customers. So I can definitely see the potential growth in here. Because of that, it will only be a tier 3 stock. Tier 3 stocks are usually safe for my high speculative play. This is a company, if it does well, it could do great returns in one's portfolio, and even a small position can become a big position with big gains. So that's it for today's episode. I hope you guys enjoy it. Make sure to stay tuned and see you next time.